Now speaking, Glenn Wiener, Investor Relations. Good morning everyone. Welcome to VOXX International's Fiscal 2024 First Quarter Conference Call. We have released our Form 10-Q and press release for the period ended February 28, 2023, which are available in the Investor Relations section of our website at www.voxinl.com. Pat Lavelle, Chief Executive Officer, Michael Storer, Senior Vice President and Chief Financial Officer, and President Beat Colley, are all present today to share information and answer questions during the Q&A portion of the call. Additionally, next Thursday, July 20th, we will be hosting our virtual annual meeting of shareholders. Shareholders can access the meeting by visiting www.virtualshareholdermeeting/vox2023. During today's call, we will discuss forward-looking statements based on currently available information. Please review our Form 10-K for more details on the associated risks. We are now ready to begin the call and look forward to providing you with all the necessary information. Now speaking, Pat Lavelle, President and Chief Executive Officer. Good morning everyone. This quarter, the market remains challenging and is reflected in our first quarter results. Net sales were down 13%, with the automotive segment down 3% and consumer 17.5%. We have seen some increases in customer production but not in all cases, and chip issues appear to be easing. Margins are tight due to current contract pricing, and we are working to mitigate this with production shifts to Mexico. Volume with Nissan and Stellantis picked up, and we are now supplying the Evolve system for the Wagoneer, the Cherokee, and the Pacifica. The automotive aftermarket continues to be pressured due to lack of cars in the retail environment. Consumer sales were down 17.5%, with more than half of the growth coming from the wireless speaker category. Premium audio sales saw a big uptick when COVID first hit, now seeing the opposite as discretionary income is being spent elsewhere. Our flagship brand Klipsch is expanding into new partnerships, including integration into luxury Crest pontoon boats, Aviara Day yachts, Hard Rock, Margaritaville, PGA, and Dodge Ram EV trucks. Biometrics sales were in line with last year in Q4 and are expected to drive growth in fiscal 24. We anticipate fiscal 24 to be difficult due to the global economy and shifting consumer preferences, so we are managing overhead, adjusting workforce, and implementing brand and product rationalization programs. We have new premium audio products launching, supply chain improvement should help margins, chip availability should stabilize production, new OEM programs, and biometric projects. Now speaking, Mike Storer, Senior Vice President and Chief Financial Officer. Good morning everyone and thank you for joining us on this quarterly earnings call. We are pleased to report that our first quarter net sales totaled $111.9 million, a 13.1% decrease from the same period last year. Automotive segment sales saw a slight increase of $1.2 million while consumer segment sales decreased $15.6 million. Gross margin decreased by 120 basis points for the comparable first quarter periods, with automotive down 120 basis points, consumer down 190 basis points, and biometrics immaterial on a gross profit basis. Total operating expenses were $39 million, a $1 million, or 2.4%, improvement for the comparable periods. Other expenses in Q1 of fiscal 24 were $1.6 million, compared to total other expense of $2.2 million in Q1 of fiscal 23. We reported an EBITDA loss of $7.6 million, compared to a loss of $4.2 million in the prior year, and an adjusted EBITDA loss of $4.9 million, compared to a loss of approximately $100,000 when comparing Q1 of fiscal 24 and 2023. As of May 31st, we had cash and cash equivalents of $5.2 million, as compared to $6.1 million as of our fiscal 23 year-end on February 28th. Our accounts receivable decreased compared to fiscal 2023 fourth quarter due to lower sales. Total debt stood at $36.7 million, a $2.5 million reduction from the prior year-end. We anticipate a ruling by the court on the Seaguard matter to occur on or before August 3rd. We look forward to your questions. D.A. Davidson analyst Tom Forte inquired, Pat, how does the current macroeconomic environment compare to prior recessions? Pat Lavelle replied, we saw a major shift in consumer preferences as a result of the pandemic, with people opting for more experiential activities. This caused a pull forward in sales, as people bought bigger products like home theater systems and speakers that don't need to be replaced frequently. We expect this trend to continue through the remainder of 2021 and potentially into 2022, but we are attempting to offset it with new products such as our Plexus soundbar and party speakers. D.A. Davidson analyst Tom Forte inquired, can you explain what the current challenge is for automotive? Is it supply chain or something else? Pat Lavelle replied, there are still some issues with chip supply for certain vehicle components, leading to an inventory buildup. This, combined with sticker shock from consumers, is causing a decrease in sales and production cuts from car manufacturers. As market conditions change, we anticipate these effects will be mitigated by interest rate reductions or lower prices on vehicles. D.A. Davidson analyst Tom Forte inquired, "Do you have a historical proxy to help us understand the pull-forward effect of consumer electronics in the early stages of the pandemic?" Pat Lavelle replied, "COVID significantly impacted buying patterns in 2020 and 2021, resulting in a decrease in equipment purchases by audiophiles. We are expecting to see an improvement in the coming year as buying habits return to pre-pandemic levels by 2024. D.A. Davidson analyst Tom Forte inquired, "Can you elaborate on your strategy for reinvesting the savings in supply chain costs into promotional pricing?" Pat Lavelle replied, "We experienced significant supply chain delays leading to an increase in storage costs. This is due to bringing in excess inventory to meet the demands of the holiday season. We anticipate this will continue for another quarter and then return to normal levels. We expect to benefit from lower freight rates and improved pricing going forward, resulting in a more profitable premium space. We are already seeing pre-pandemic pricing levels and believe that reduced costs will lead to adjusted retail pricing, maintaining competitiveness with our competition." Pat Lavelle replied, "Thank you for joining this call and taking an interest in VOXX. I hope the information shared today has been helpful to you. If there are no further questions, I wish you all a good day."